Daily bias is easy once you stop overcomplicating it. And in this video, I'm going to give you a simple formula that you can use to predict daily bias consistently. And I've literally condensed 4 years of trading, 4 years of ICT into a simple formula that you can use in any pair, in any asset to predict daily bias. So let's get straight into the video and I'll show you what that formula is. Okay, so for daily bias, the first thing you want to do is there's only 3 time frames that you actually need for daily bias. And those are the weekly, the daily, and the 4-hour chart. Now you need to use it in that order, right? So you have to start with the weekly, go on to the daily, and then the 4-hour chart, right? So you've got to use all 3 of them. And you don't go below the 4-hour chart. I see a lot of people, who go on the 1-hour chart, and they make the mistake of looking at the 1-hour chart trying to predict daily bias. You only need the weekly, daily, and the 4-hour chart. And again, you don't need the monthly chart. Like, you really don't. You can everything you need is on the weekly, daily, and 4-hour chart. So just to simplify that, 3 time frames is all we need now. What we're going to do is we're going to start off on the weekly chart. Now, this example right here on dollar yen is the hardest example that I can give you. Right, it's the hardest example. I went through all my watch lists. Right, I scrolled through each and every single pair, and USD JPY by far is the hardest example. So if you can understand this, you will understand literally any pair, any asset, anything that you trade. So run the weekly chart, and the first thing you want to do on the weekly chart is you want to look at the most recent price action. Right, we want to look at the most recent price action over here. Right? We don't care about this order block all the way down here. We don't care about this. We care about, what's actually relevant to us. And this is the current weekly chart candlestick, right? So this is today's price action right here. So we care about this recent price action here. That's the only thing that we care about. And the first thing that I see, and for those who don't know, I always do my analysis live. So what I mean by that is I haven't gone below the daily or 4-hour chart on this, right? So this, I'm literally telling you exactly what I would do when I get on the chart. So the first thing I'm seeing here, I don't know if you guys see it, but if you've watched my channel for a long time, you'll know, right? And I'm sure most people know, at this low here, there's lots of liquidity. So let's mark out this low here, right? And this is what you always want to do, right? You always want to look at liquidity first, right? Liquidity is king. So we always look for liquidity first when determining daily bias, right? We want to look at old highs and old lows. So old lows here and old highs here. Now, at this low here, there's lots of liquidity. Lots and lots of stop loss orders at this low, right here. And you see this? You see this wick? How we come down, we wick out this low, and instantly reverse. That right there is a liquidity sweep, right? Very, very important. And if you don't understand liquidity sweeps, don't worry. There's a full, completely free 2-hour trading course where I go into stupid detail about liquidity sweeps. But if you understand liquidity sweeps, you'll know exactly what I'm talking about here, right? Because what price really does, or what price really did, is you see how we were dead bullish, right? Price came all the way down. It took out liquidity here. Remember, this is the weekly chart, right? This isn't the 5-minute or 1-minute chart. This is a major time frame that all the banks, all the hedge funds, all of smart money, everyone's looking at this chart. Everyone's looking at this chart, and only smart money move the weekly chart, right? Retail can move the 1-minute chart, but smart money are moving the weekly chart. And at this low here, lots of liquidity. Price comes down, it wicks out this low, instantly starts reversing. That right there is a very bullish sign. Very, very, very bullish sign. So that's the first thing that I noticed. So let me just mark this out. Let's actually write this down here. This is what you always do, right? So when you get onto your charts, the first thing you want to look for is liquidity, right? Liquidity. Let's put this right here. Liquidity, right? So we've got this low here. Liquidity sweep. Price wicks it out. Instantly and aggressively moves off in the opposite direction. Okay, so now that liquidity has been swept at this low here, the next thing we do is we study this high here, right? Has the liquidity been taken here? No, right? And this is really, really important. Really, really important right here. Here is a fair value gap, right? It's a bearish fair value gap. And let's mark this out like this. This is our bearish fair value gap. Now, can you see how price literally comes all the way up, taps it, and then instantly reverses off in the opposite direction, right? You see how price, we have our liquidity sweep, like this. Price comes all the way up, it taps this fair value gap, and then starts to retrace, right? That right there is bearish. Right, that's bearish. Now, you might get confused, and this is why I said this is a very difficult example. You might be like, oh, Atif, we had a liquidity sweep, and if we just zoom out a bit, like this, the overall direction is bullish, right? What's actually going on here? What's actually going on here? And for those who don't know, right, on Twitter or X, I called this live, right? When we were all the way down here, I called this that we're going to hit this fair value gap. So there's me bragging a bit, but but if you if you follow me on X, you'll know what I'm talking about. But what's really going on here, and it's just so important that you understand this, right? If we zoom out, we are in an overall bullish trend, right? Pretty obvious. If you ask anyone, what trend is this, right? What trend is this on the weekly chart? Oh, this is a bullish trend. What's actually going on here, right, is prices at all-time highs on here. This is all-time highs. Now, obviously at all-time highs, there's no liquidity, right? No one's shorting at all-time highs, right? No one's gonna, imagine if this was the highest candlestick and none of these down close candlesticks were here. No one's gonna start putting their stop loss orders at all-time highs, right? Only now, when price starts to come all the way down, to allow people to start shorting, and by people I mean major banks start putting their stop loss orders here. Right? They're shorting on the weekly chart because they see price comes down. Now price is actually going down to take out stop loss orders here. Right? It comes down, it takes out stop loss orders here, and it instantly and aggressively reverses in the opposite direction. Now you might be wondering, okay, what's happening here, Atif? Like, what's actually going on here? Why have we hit this bearish fair value gap and started to retrace? The reason we've done that, this is so important, this is sum up for your notes, right, is price doesn't move in straight lines, right? It doesn't move in straight lines. Now, smart money traders who are going to target this high, so let's mark this out, right? Let's mark this out all the way like this. This right here is, it's a bit of a weird line, but let me just do it like that. Right, this right here is liquidity, right? This is our major liquidity, and what's really important about this is all-time highs. So I'm just going to mark this out as ATH. Liquidity, this is all-time highs. This is the highest that yen has ever been. And some people, for whatever reason, are obsessed with picking all-time highs, right? You see this on, the S&P and NASDAQ. People are just obsessed with picking all-time highs, trying to capture some major gamble where, it drops 10, 20%. You don't need to do that. But some people, for whatever reason, they're shorting here and they're putting their stop loss orders at this high here, right? There is liquidity here overall. And if you zoom out, the overall direction of this market is bullish, like we said. Now, towards the end of this video, and for those who still watch, I'm going to give you something very, very advanced that will probably change your trading forever. But that's a little golden nugget, and it will make a lot more sense on why price is actually bullish overall and why we're taking out this liquidity. But you can see what's going on in this price action alone, right? Because I don't want to make it too complicated for you. What's really going on here is we've had our liquidity sweep. The overall direction is bullish. Is we are looking to target this high. Now, price doesn't go in straight lines. So what I mean by that is price is really, remember this is our liquidity sweep, right? Price is coming down to allow smart money traders to start buying at this fair value gap, this order block, optimal trade entry to do that, right? The exact same thing, remember, this is the exact same thing we see on the 1 minute, 5 minute, 4 hour chart, 15-minute chart. The exact same thing where we have liquidity sweep, obvious liquidity, retracement, up. The exact same thing happens on all time frames, right? And you might hear ICT or other people say price is fractal. What they mean by that is this, right? The exact same thing that happens on the 1 minute chart happens on the weekly chart. Now, what that means for us as traders, we're not trading the weekly chart, is it means for us overall direction is bullish, right? The overall direction is bullish because if we just look at this fair value gap here, this bullish fair value gap, right? Mark this out. Okay? Price comes out. Look at this, right? See how we wick into the fair value gap and then we instantly start moving off in the opposite direction on the weekly chart. That right there is very, very bullish. And another thing that's really important is if we get the Fibonacci from this low to this high, right? Anything below the 50%, this light green line here is the 50%. Anything below the 50% level is a good buy, right? Smart money traders will not buy until price gets into the lower 50% level, right, of a price swing. They will not buy until price gets into this lower 50%, right? Very, very important. They're not going to buy up here. They're only going to buy when it's in the lower 50%, right? And remember, you might be thinking, oh, well, who's trading the weekly chart? Smart money traders are literally buying the weekly chart. They're buying this fair value gap with their stop loss order here, targeting all-time highs. And they'll hold on for months, as long as it takes, right? Because they have the money to do so. Now, we're not doing that, but by studying what they're doing, we can almost get on their pigtails, right? We can almost copy what they're doing, right? And pick up some crumbs that they leave behind. But those crumbs are worth, thousands, millions. So for them, you've got to remember, they're trading billions, right? So, a few million, it doesn't mean anything to them, right? So they're doing all their orders, all their analysis on the weekly chart. And if we see below the 50%, just look at this, right? Look at this. So you see how price starts gapping down, right? Strong, aggressive candles down. Look what happens when we hit the 50% level, right? Look at what happens when we hit the 50% level. This body here almost respects it perfectly. We have a bit of bullish movement here. Okay, we have this candle here, this bearish candle, but where did it go? Look at this candle, where does it go? It wicks straight into the fair value gap. And then this candle here almost fills the fair value gap entirely, and then we start to shoot off. And now we're above the 50% level, right? Very, very important. Okay, so once you've got your liquidity, right, so we've looked at liquidity here, and then you've looked at your fair value gaps here and here. The next thing you want to do is you want to start looking at order blocks, right? Now, on the weekly chart, we don't even hit this order block. We don't hit it. Let me just make this very clear. We zoom all the way out like this, right? All the way out like this. We just miss out on it, right? This is the fair value gap. We just miss out on the order block. That right there is incredibly bullish. Right? A lot of people get confused by that. That's incredibly bullish. The fact that price, let's zoom out. The fact that price couldn't come all the way down and touch the order block here is very, very bullish, right? Normally I say I want price to hit it and aggressively shoot off. If price doesn't even hit it and start shooting off, that's even more, I guess, supports the argument that we're bullish, right? Because price is so bullish it couldn't even get to that point. So that right there is what I normally do on the weekly chart. I look for liquidity overall. I want to see, is price sweeping highs and lows? Where's the overall direction? Then I look at fair value gaps, which sides are being respected, and then I look at order blocks too, just in case. But liquidity and fair value gaps are like my bread and butter. Those are the two things that I really look for. And this is so important now. We've done the analysis on the weekly chart. We know overall that we're bullish, right? We've swept liquidity here. We've got all-time highs here. We zoom out like this. We said this. The overall trend for years. Remember, this is the weekly chart, right? So if I got this is 2021, right? It's 2020. This is 4 years of price action here. Remember, this is the weekly chart. The overall trend for years is bullish, right? So I've got the overall weekly trend, macro trend. We've got liquidity. Fair value gaps are being respected. I want to get on the daily chart, and I want to see the daily chart showing me similar things. I don't want the daily chart to be bearish. I don't want the 4-hour chart to be bearish, and then the 1-hour chart to be bullish. I don't want any of that. I want everything in agreement. So let's get onto the daily chart and see what we can see. Okay, so here we are on the daily chart, and like we said on the weekly chart, overall we are bullish now. I know lots of smart money traders are going to be like, oh, look, Atif, market should shift. Yeah, look, you can take trades here, but look at these candlesticks. Like, look at this, right? Look at these strong bullish candlesticks. There's one down close candle here. Right, look at this. From this low to this, guess this bit here. Or this high here, right? Or this high here. This liquidity pool here. Look at all these strong, aggressive, green up close candles. You have one little down close candle. And then look at the way down. Look at all these choppy, large wicks. For every red candle, there's a green candle, right? Very choppy, very lethargic. We slowly, look at all these dojis here. We slowly take it out. That right there is telling us that we're bullish overall, but price is slowly coming down just to allow smart money traders to buy the dip, right? Buy cheap. And we talked about that on the weekly chart, because what's really happening here is overall we're bullish. Look at how strong the bullish candles are compared to the bearish candles. What's really going on is it's just allowing smart money to buy at the below the 50% level, right? That's what's really going on here. So all of this right here is accumulation. Look at all these dojis here. This is smart money buying, 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 and telling their friends to buy. That's what this is. Smart money buying, buying, buying. They're accumulating all their orders here. And then what they're going to do is they're going to ride price all the way up to this, right? Ride price all the way up like this. All the way up like that. Now, we don't care about, we don't have to trade the daily chart, but we can trade in this direction using the exact same logic they're doing. So that's the reason why price comes down. Lots of traders are going to get chopped up, shorting dollar yen, and then they're going to lose a lot of money. Who wants to be in this mess here? Like, who wants to be shorting dollar yen in it? Yeah, okay, you get a few good moves here, but who wants to be shorting these large weights? Because what's going to happen here, and you're going to see this all the time, you're going to short, right? You're going to have a liquidity sweep, and you're going to do what I tell you, right? You're going to put your stop loss at this liquidity sweep, and it's going to get swept again, and then it will come down, and it will just chop around, it will take out lows, take out highs, and it will just be the awful price action that will just confuse you, blow your prop firm account, and break you. Because trust me, I've done this for a long time. You just want to avoid this price action. But what we want to do now that we know that, now that we understand the overall direction is bullish, is we want to start studying fair value gaps and order blocks now, right? So let me just make this very clear. Right here is an order block. So let me just mark this out. This is an order block, and it'll be clear on the 4-hour chart, but I just want to show you on the daily chart. Right here is an order block. Price wicks in, instantly shoots off in the opposite direction. Very, very, very nice, right? We always like to see that. But this price action here, we have a fair value gap. So let's mark this out. Fair value gap here. And again, price does not touch it. It comes down, comes close to it, but now we're starting to move off in the opposite direction. Now, I want to get onto the 4-hour chart because this is getting a bit messy now, but just remember the overall logic that we had on the daily and 4-hour chart, right? Sorry, the daily and the weekly chart. Weekly, we're bullish overall. Liquidity sweep, all-time highs liquidity. Daily chart is just retracing to allow smart money traders to buy in this fair value gap, in these order blocks, just allowing smart money to buy before we ride price all the way up to all-time high. So we're going to get on the 4-hour chart and we're going to look through that lens, right? I'm not going to look on the 4-hour chart and think, oh, how can I short this? I'm not going to do any of that. I'm only going to look for longs, and more importantly, I'm going to look for targets on the 4-hour chart. So let's get onto the 4-hour chart and see what we can see. Okay, so here we are on the 4-hour chart, and like I said, I've not seen the 4-hour chart, so I just want to show you what my thoughts are. So the first thing I want to see is I just want to see order blocks getting respected. And if we look at this down close candle here, let me mark it out, right? This candle right here. Look at how price respects it beautifully. Look at that. Let me just mark the body out. Right, we just look at that. Look at the wicks. We just tap the order block's body twice, and then we shoot off aggressively and massively in the opposite direction. Let's just zoom all the way out. We shoot off aggressively in the opposite direction. What this means is the order flow, and the order flow just means the overall direction is bullish. Right, so don't get confused by the terminology with order flow, liquidity sweeps. Liquidity sweep is just a stop run. Liquidity is just stop loss orders. Order flow is just a direction on whatever time frame they're talking about. Don't get a lot of people want to sound smart. A lot of people want to sound smart, but you know it's very, very simple when you start to understand what's actually going on. So this order block's being respected, and this order block here, and again, this is what I always like to see. So smart this out. Here's a bullish order block that price doesn't touch, does not touch it. Very, very nice to see that, right? Because like I said, you know, usually you want to see price hit it quickly and aggressively move off in the opposite direction. If price does not even touch it because it's so bullish, that's an even stronger sign. That's an even stronger sign that price is bullish, right? So now that we've studied our price action, we've done all the hard work on the higher time frames. Now I want to look for targets. Where's the most obvious liquidity target? And if we zoom out to the left-hand side of the chart, where is the most obvious liquidity target? And I'm literally telling you guys before I've even spoke about it. This is our obvious liquidity. Now why? Let's just suppose this was bearish, right? So let's just suppose this was a bearish order block. Does that look like price has respected the order block, the bearish order block? No, not at all. Look how deep we've retraced, right? We've almost retraced 75% into the order block, right? That is not bearish at all. If price was bearish, it would tap the order block, almost like it did here. It would tap the order block and then quickly move off like that, right? We don't have that at all. In fact, we've got price respecting bullish order blocks, completely disrespecting bearish order blocks. That's exactly what we want to see. And at this point here, we're just looking for our targets. So at this high here is our liquidity. And for those who are wondering, oh, you know, see, why is there not liquidity at this low or this low here? This is why. This is how we actually know that price is going to go through the liquidity, by doing the higher time frame analysis, daily buys, all the boring but profitable stuff. That's how you actually know, and that this liquidity pool is going to get taken, right? Like, I'm not looking at this low, you know, when price retraces. I'm not going to think, oh, you know, there's liquidity here, price is going to take it. I'm only looking at this high because we've done all the analysis on the higher time frame. So let's just mark this out. Let's just mark this out. So right here is liquidity. And for those who always get confused about what liquidity actually is, it's just stop loss orders, right? It's where the money is, because these large banks, hedge funds can only get into their positions and out of their positions where there's billions and billions of dollars. And on dollar yen, on the 4-hour chart, there are billions of dollars at this high here, right? And at this low here, right? Very, very important. That's the price is going to go and target these highs here. Now, what does that mean? What does this really mean? All this, you know, analysis that I've told you on the higher time frame that we have all-time highs. What does it actually mean for us as traders? So this is where things get a bit, not difficult, but it's different for every single trader depending on what your trading model actually is. For me, as a 4-hour chart trader, right, as a swing trader, I'm just looking for longs, right? So this would be an example of my entry. Like this, right? Fibonacci, I enter at the 0.705 level. There's no magic in this number. There's no, you know, secret Fibonacci. It's just an easy way of entering it. And I learned from ICT, and this is what he used, so I just stuck with it. This is my entry, my very sophisticated advanced entry. Just a Fibonacci retracement, and I target a 3-to-1 in a direction. Notice how I don't target the actual liquidity pool itself, because you don't really need to, right? Price could retrace. So for me, I'm happy, and I strongly recommend you either just aim for a 2 or 3 risk to reward ratio in the liquidity direction. You don't have to target liquidity. You don't have to do anything fancy, especially as a day trader. I get people telling me, you know, as a day trader, let's just imagine this is the 1-minute chart, right? All the way over here, and the stop loss is like this, right? This is the 1-minute chart, and they're like, oh, See, do I have to target this liquidity pool on a day? No, no, you don't. We just have to trade in the direction. So let's just remove this. And that's what a swing trader would do. You just ride price up. If you're a day trader, scalper, any of that sort of stuff, you're going to get onto your entry time frame, and you're just going to take every single long entry you see. You're not going to take any bearish entry. You're not going to try and short down to this fair value gap. You're just going to take any bullish entry to this liquidity pool here. Now, I'm not going to talk about entries because I've talked about it so much, right, in the recent videos. So if you want to learn more about entries, go watch the full free 2-hour trading course on screen now, where I talk everything you need to know about entries and stuff. But this video right here is just for daily buys. And at this point, your daily buys is done. We're done with daily buys. We know we're bullish, and we're only going to get into lower time frames looking for longs. We're not going to do anything fancy. We're not going to try and short. We're just looking for longs. And at this point, you're just looking for your bullish entry buy. That's it. Okay, congratulations if you got this far, because that was a very intense, that was a very difficult pair to determine daily buys on. But if you understand that, congratulations. Now, I'm going to give you a bonus tip, like I said, which I normally give to my paid students. And yeah, this is a golden nugget. And it's the little things like this that make you profitable. People always ask me that, hey, what's the difference between, YouTube and your paid program? It's the little, I mean, you probably understood it in this video, right? The little things that I mentioned, that's probably what clicks in your mind, right? It's probably not the liquidity sweep, fair value gap. It's probably the little analysis that, when a price comes very close to an order block, but then shoots off, that's even more bullish, right? Little things like that is what makes you profitable. But anyway, I'm rambling on. What you can do, right, is let's suppose you're on the weekly chart and you're like, oh, okay, look, it's taking out liquidity here. It's respected the bearish fair value gap. I'm not really sure where price wants to go. What you can do is you can get the futures contract up, and we can look at the dollar index. So if we click the dollar index, remember, we're trading USD JPY. What does that really mean? It means the US dollar against the Japanese yen. Now you might think, well, where am I going with this? We are trading one currency against another. So there's a few things that can happen. If the dollar is bullish and the Japanese yen is bearish, price is going to go up. If Japanese yen is bullish and dollar's bearish, USD JPY is going to go down. Right? And if one is bullish, let's say dollar is very bullish and Japanese yen consolidates, dollar yen will go up. And similarly, if the dollar consolidates and JPY is very bullish, USD JPY will go down, right? Hope that makes sense. That's what it really means. If we zoom out here, the overall trend is bullish. Now, if we look at the dollar index, this is the US dollar on the weekly chart. The overall trend on the dollar is bullish. Now, again, you might be confused, like, okay, how do I really know if it's bullish, right? Because of this, order block, price isn't really close to any liquidity pool. It's retracing quite a bit. It almost took out this low. How do I really know? This is the golden nugget here, right? Right here, if you type in US30Y on TradingView, you'll get something called the United States 30-year government bond yield. Now, it sounds complicated. All you need to know is this is the interest rate for the US government's debt, right? So, like bonds and stuff. This is the US government's interest rate. And this is something for your notes. The higher the interest rate, the more valuable the currency, right? So the higher the interest rate, the more valuable the currency is. And it makes sense, right? If you can get 4.673% investing in the US dollar compared to, let's just suppose, 2% in the UK. I know that's not actually true, but let's just imagine that was. If you're an investor, obviously you're going to invest in the US dollar, right? Now you might be wondering who's investing in dollars or currencies. Big banks, big hedge funds, pension companies, those who have money. Not us, but those who actually have, a shit ton of money, they're investing in currencies, right? And the only thing they're looking for is interest rates. So with a dollar, you've got a very, very good interest rate. And I don't want to get too much into macros, but if you probably understand that the Japanese, interest rates even negative or like zero, right? So it's not valuable at all. You don't need to know that. All we need to do is look at the price action. And if you look at this price action, I hope it's pretty obvious where price wants to go, right? Here's your here's liquidity. Here's your liquidity sweep there. Here's your respect of the order block. Let's mark this out. Here's respect of your order block there. Here's your liquidity pool up here. Right? Well, that's pretty obvious, right? Look, listen, it might not be obvious at first, but if you watch that full 2-hour trading course and you binge watch a lot of videos on my channel, this will become second nature, and I recommend that you do that. Just get it over and over and over again into your head, because or your subconscious mind, for those who know. Those who know what I'm talking about will understand that. But here we go. So price comes, takes out liquidity here, comes up, little retracement, nothing major, not towards these order blocks. Again, comes up, makes it very clear that we're going to go for this high here, right? No order blocks being respected here. No bearish order block Very clear that price wants to come to this high. Here's your retracement into an order block. What's price likely to do? Go up. What does that mean? What does this really mean as traders, right? Let's just remove this. If the US interest rate is going to go up, right? If it's likely to go bullish and it's going to take out this high, what does that mean? Interest rates are going up. What did I tell you? That means the dollar is likely to go up, right? Because it's higher interest rate, it's more valuable, right? Overall perspective for the dollar is bullish, right? We are bullish overall. So this right here is just a retracement before we continue up. Now you might be wondering, okay, that's cool, interesting. Why do I care about this? This is why we care about this. This is the dollar. This is what this index actually is. This is the US dollar against all the major currencies, right? So GBP, USD, yen, all that sort of stuff. This is the dollar against all the major currencies. If we scroll down, I mean, you don't have to scroll down. If you type in 6J on your charts, right? If you type in 6J into your trading view charts, you'll get the Japanese yen futures. That is the exact same thing, but for the dollar, right? So this is all the currencies against the Japanese yen. Essentially, it's how valuable is the Japanese yen, right? Whereas this is how valuable is the dollar. This is the dollar against all the major currencies. This is the yen against all the major currencies. Now, you remember from school, spot the difference. If we look at the dollar index, right, just pause the video, take a screenshot. Just study this price action here. Right, let's just zoom out. Study this price action here. Study this price action here. What direction is this going in? Clearly bearish, right? What direction is this going in? Bullish, or at worst, consolidation. And do you remember what I said to you? If the dollar consolidates and the Japanese yen is bearish, what does that mean for USD JPY? It's going to go up. Right, remember what I said to you. So, at worst, this is going to consolidate, but we know by looking at the bonds that this is actually going to go up, that we're actually bullish. So if we get Japanese yen, and we just study the price action, I mean, for years and years, this drop was around 2021. We've been bearish, 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 and if we look at the price action, right here is your liquidity sweep. I mean, this stuff works, right? I'm not making this up. This stuff actually works. This is gold dust right here, which I'm giving you. This right here, this works. Liquidity sweep here, price comes all the way down, barely respects the order block. I know we do respect an order block all the way down here, but come on, guys, is that really respect? What's actually going on? Like we said, this is just a retracement here. Again, look at that. It's almost like I work for the central bank. Look at this. Here's the 50% level. Look at price. It hits it, wicks down, wicks down, wicks down, and now it's starting to reverse. This is just allowing smart money traders to start selling, 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 right? Selling, selling, selling. So what does this really mean? Japanese yen is likely to do this. Continue downwards. Take out this low. Like that. Continue downwards. And dollar is likely to go up, like we said, because of the bond yields. Dollar's likely to go up and eventually take out this high. What does that mean for USD JPY? Right, what does that really mean? Let's get all the way down here. What does that really mean? It means we're likely to just we've really done our retracement already. It means we're likely to just do that. Right? You guys understand that? And if you zoom out, you can see from the previous price action that I've shown you, that's exactly what happens. Right? Remember, the yen was very bearish, the dollar was bullish or consolidating. What happened? USD JPY shot up. And again, this is around 2022, 2021 is when we start getting that big bullish movement on USD JPY. Exact same time when the yen starts to drop. So quick and easy. Oh no, I say quick and easy for a minute. It's a hard way, but once you get used to it, you can just mix and match currencies left and right. Because what you really want to do, and we're getting very advanced here, what you really want to do is you want to match strong currencies with weak currencies. Right? So in this case, the Japanese yen is weak, dollar is bullish, right? So you've got strong currency against a weak currency, which is an easy trade. And let me give you another example, just a quick and easy trade. This is what I do over and over and over again. So if we get onto 6N, so this is the New Zealand dollar futures, right? This is, again, the New Zealand dollar against all the currencies. Right here's liquidity. Here's your liquidity sweep. Here's the obvious low that we're going for. Completely, if you understand liquidity, you know we're definitely going for this low. And again, there's another low right here. No order block's being respected. We're choppy, we're consolidating. Remember this price action, right? Just close your eyes and make sure it's in your head. Now remember this, right? You see the difference. You see the complete difference between this. This is a lot more. This is pound futures, by the way. 6p. See how GBP, I shouldn't say GBP actually. See how the British pound futures are a lot more bullish than the New Zealand dollar futures, right? What does that mean? If we've got bearish and we've got bullish, what does that mean? It means GBP NZD is going to be bullish. So we get onto GBP NZD. Look at that. And you can see like my looking for an entry. Let's just remove this. Right? Look at that. Almost like clockwork, isn't it? Almost like clockwork. Just by looking at the futures contract, you can play matchmaker, and we zoom out. There's liquidity on like the daily and stuff. I don't want to bore you guys, but this is what I do, and you can see literally what I do every single day. And as a day trader, you don't want to be trading any of these like exotic currencies and stuff. But if you're a swing trader, this is a gold mine. This is an absolute gold mine because you can just get into easy trades, right? I mean, it's obviously not the best here, but even here, you could probably take this trade, and by this trade, I mean, you could probably take this trade and become have a winner more often than not, right? And this is a poor trade, like in terms of price action, because I mean, I don't want to get too much in depth, but GBP AUD is actually the better setup here, right? So this is the better setup. But anyway, I'm rambling on. That right there was a very golden nugget right there that I gave you. So if you didn't understand that, don't worry. All I'm really trying to tell you to do is if you're struggling with the let's just get out. If you're struggling with the bias, using the currency futures can help you break the deadlock, so to speak, right? So very important. And yeah, I love making these videos. I love making these long analysis videos. I used to do it every week. I don't know if anyone remembers. I used to do it every single week. I used to do the weekly analysis for forex, but nobody cared. Nobody cared. There's only like 50 people who watched it. So yeah, this is what you need for daily bias. Look at liquidity first. Look at the fair value gaps. You can look at order blocks, just study them. But make sure whatever happens on the weekly chart, you want to see the same thing happen on the daily and the same thing happen on the 4-hour chart. That's all you need for daily bias. And like all things, practice. Repetition is what makes you profitable. But yeah, that's all there is to this video. Make sure you watch the full free 2-hour trading course where I tell you everything you need to know to become a profitable trader. And I'll see you in that video there.